If you're a stock market beginner and you're not sure how to get started, guys, don't worry. I've been in the same situation. It is a jungle out there, but you know what? I did lots of research. I compressed everything together. So by the end of this video, you can go and get started. And you know what? Right now, the market is tumbling and struggling. There might be even a good opportunity right now to get your very first step into the market. Now, I prepared a few slides for you, and today might be a little longer than usual because there's lots of information out there. Again, I'm compressing as much as possible to make it digestible for you guys. I would like to give an overview of what you can expect. So by the end of this session, you'll be able to get a better understanding of what kind of investor you are. You'll get an understanding of elementary financial definitions, and also you will have a broad overview of what kind of online brokers are out there, what kind of books you could read, what kind of videos you can watch to get and build a better financial understanding. Now, again, I'm not a financial advisor at all, just a guy who had to start from scratch. I'm happy to share my learnings. So by all means, whatever you invest in, it's on your own risk. Just keep this in mind. I'm happy though to provide a good guidance on how to get started. Before doing so, there are actually 3 fundamental questions you would need to ask yourself. First, I would like to make clear we speak the same language. Talk about the definitions, what we mean by certain words. What is a stock? What do we mean by market capitalization? What do we mean by diversification? I actually compressed in an overview how to invest. Stocks versus ETFs versus index versus mutual funds. What are the advantages and disadvantages? I'm going to share how the most popular ETF performed historically, what you can expect, and what that would mean to your investment. Where do you find ETFs? And then obviously what kind of online brokers are out there you can actually get started. Also, guys, for you who have proper financial education already, you know the basics, feel free to skip the basic parts. So for you, I actually set up a timeline, but also feel free to stay if you want to refresh your memory. Now, let's start with the 3 fundamental questions, and those are: what are my investment goals? If you're looking for the quick solution, I want to be a millionaire next week. Awesome, if that's working out. However, I'm not going to gamble with my money. It's really hard earned. You probably work hard for your money as well. I don't want to see this money losing. And that's also relating to the next question, which is basically, what is my risk tolerance? Am I fine with high risk, or am I rather the more safe guy? Please ask yourself this before you invest. And then also, how much do you actually want to invest? Do you want to invest every single dollar you have? I can only recommend, please don't do so. Make sure you have set up an emergency fund first. You can see this in the other video I created. You'll find a link here. If you want to get started, these are the basic definitions we need to understand first, so we speak the same language. What is a stock? A stock is basically an equity investment that represents part ownership in a corporation, and it entitles you to part of that corporation's earnings and assets. So basically you own part of this corporation, which sounds really fancy. The stocks come in 2 different ways, with voting rights or without, and also you can get stocks with dividends or without dividends. Talking about growth versus value. You may have heard of that terminology before. Growth stocks are basically organizations which quickly transform from small to large companies by maximizing revenues at the cost of profitability. You can think of a Tesla, Netflix, Amazon, those kind of organizations. So they really shaped the market. High volatility, high up and downs at the beginning. Also to keep in mind, in terms of risk ratio, can you handle those up and downs mentally? Because it can get emotional if you see your investment going down, dipping by 30–40%. And then also in terms of value stocks, those stocks are usually more longer term in the market. They're very established. Thinking of a Coca-Cola, for instance, they've been around for a long time. They know how the market works. There's not too much happening. So the fluctuations, volatility is fairly low. And this is reflected here in the very illustrative graph I created myself just to visualize the up and downs and the growth. You can expect high peaks and troughs. Index. What is an index? An index tracks the stock price of a group of companies. They've been kind of mixed all together, and I'm pretty sure you know the Dow Jones Industrial Average, which contains 30 of the largest US companies. Then there's the Nasdaq Composite, which is an index with a heavy weight of small and large technology companies within the US, but also outside of US. And then there's the S&P 500, which basically contains the 500 largest companies in the US. And for all the other countries, they all have different indexes. When we talk about index, another terminology which is important is market capitalization. That's a parameter which is determining the size of a company based upon its market value. What is the market value? You take the stock price, you multiply it by the number of shares which is available to the public. This is how you get to the market size. And if the price of stocks of those companies as a group go up, the index rises and vice versa. Diversification, this terminology we're going to use more often. Diversification is important because it's an allocation of capital that reduces the exposure to any one particular asset. And the goal here is really to reduce the risk and the up and downs, the volatility I was just talking about, as you are investing in a variety of assets. You can diversify country to country. You invest in lots of countries. You can invest in lots of sectors like healthcare, insurance, finance, automobile, etc. And you can also diversify by companies which are dependent on seasonality or non-seasonal companies. I brought for you two examples of diversification. One is where you invested, for instance, in 3 stocks equally, and you see 33% of a stock could decrease. Let's say we would have Tesla, for instance, and Tesla is breaking down. You could potentially lose 33% of your total investment, which could be devastating. However, if you're broadly diversified, that means here in this example, you have 10 equally proportioned stocks. Here you would lose only 10% if Tesla or any other company would go down. This is the risk reduction and the beauty of diversification. There are lots of gurus out there and investment legends. And one of those, if not the one, is Warren Buffett. He's the chairman and CEO of Berkshire Hathaway, and he's amazing. Interestingly, what he's saying about diversification, have a look yourself.
My name is Mark Hake. I'm from Scottsdale, Arizona, and I'm very interested in your policies on diversification and also how you concentrate your investments.
There's nothing magic. We like to put a lot of money in things that we feel strongly about, and that gets back to the diversification question. We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who does not feel they know how to analyze businesses. If you know how to analyze businesses and value businesses, it's crazy to own 50 stocks or 40 stocks or 30 stocks probably, because there aren't that many wonderful businesses.
Well, hold on a minute. So Warren Buffett is saying that diversification is a terrible mistake? Yes, it is. Diversification is a terrible mistake, but only if you know how to analyze a business. In other words, if you know how to analyze a business, you should never diversify because you exactly know where you should put the eggs into the basket, right? So why would you diversify? That wouldn't make sense. Totally clear. Let's see what Warren Buffett says also about diversification. Let's have a look.
The question is about diversification, and I've got a dual answer to that. If you are not a professional investor, if your goal is not to manage money in such a way as to get a significantly better return than the world, then I believe in extreme diversification. I mean, so I believe 98 or 99%, maybe more than 99% of people who invest should extensively diversify and not trade. So
that leads them to an index fund type of decision with very low costs. Because all they're going to do is own a part of America. And they made a decision that owning a part of America is worthwhile. I don't quarrel with that at all. That is the way they should approach it.
Now, what Warren Buffett is saying that who invests should extensively diversify and not trade. Don't go short term, go long term, invest in a diversified portfolio in order to build wealth. So Warren Buffett is obviously a minority who has got not only the deep knowledge, network and resources to actually identify those very few companies. We don't have those resources. So that's why for the majority, probably like you, certainly like me, diversification is key. Also, if you found this useful, valuable, I would really appreciate a thumbs up. If you subscribe to the channel, I would love to see this. Ring the bell, you'll get notified. Right now, every week, I'll make sure every week I'll provide value to you guys so you guys can get invested. With this video, you should be able to invest. And as I was saying at the beginning, I was compressing lots of information together. This is kind of a one-pager. Feel free to take a snapshot or press pause to digest this information. It is a lot. It is not everything. It's not compiling everything. I picked the key criteria to differentiate them. So we've got stocks, ETFs, index fund, and mutual funds. Stocks. It can outperform the market, which would be great, or it is great. But again, it depends on the selection. How would you identify that particular stock? How do you do your analysis, and do you really know the management? There are so many factors, internal, external factors. So this is one thing you should consider if you want to invest in single stocks. If you're good in analyzing organizations, companies, and have all the external and internal factors on the radar, fantastic, good on you. Happy to learn from you as well. And then looking at the funds, they all replicate an index as closely as possible. Stocks, high risk. The mutual fund is different here also because it's being managed actively, which means there's management sitting behind this fund and making adjustments depending on the market situation, which is good and bad. Good because it can be tailored to your very individual risk or investment profile. Bad on the other side because it's quite expensive when you look at the fees. And also there are studies, and I'm going to share the link here as well, actually saying that the majority of actively managed funds are actually not outperforming an ETF, which is just amazing. So it's actually more than 80, I think 85%, I'll put the actual number in here, of those investments are not better than an ETF. Index fund and the ETF, they cannot be tailored. You just take it as it is, broadly diversified though. Then liquidity, also an important information to keep in mind. You've got buy and sell intraday opportunity within stocks, same with ETFs. However, when you have an index fund or mutual fund, you can only sell or buy stocks or that fund once the trading day is over, which also relates to higher cost. So just this to keep in mind. I know it's a lot of information to digest. Again, please feel free to rewind and or take a screenshot. Have a look at it again. It is lots of information. Now, focusing now on an ETF, I personally believe this is a great investment because it is diversified. I just picked the MSCI World ETF, which is basically reflecting 1,556 companies across the world. The majority, 65%, is coming from the US. The biggest sector with 22.7% is the technology sector. And the largest 10 positions make 18.6%, whereas Apple is the biggest position with 4%, Microsoft 3%, Amazon 2%, etc. So buying this ETF, you're very well diversified. So this is really nice. And over long term, you see from the start, the ETF has been set up until today, you see long-term growth. Obviously, if you would zoom in to particular points of time, there is a dip. In particular, once COVID hit the world, of course there are dips. There are up and downs. This is just the market, what it reflects. However, look at the big picture. If you think of 10, 15 years, this is the stable long-term growth and we want to build our wealth. Now, the average return on those ETFs is around plus 10% per year, which is good, which means you would double your investment every 7 years, which is really cool. And obviously, this would reflect on a monthly level. You will have months they look better than 10%. You will have months they look worse than 10%. But overall, across a long time, you'll see that the average growth is very solid. Now, if you ask yourself, cool, that really sounds nice. I'm one of the 99% Warren was referring to. Where do you find those ETFs? So if you're from the US, have a look at ETF.com, or if you're from Europe, feel free to click on just ETF. Great explanation. And there are more than 1,000 ETFs out there. So have a look, find yourself the one you think is most suiting for you. Have a look at those websites. I'm not getting any commission at all. This is really just providing value to you, as I know you guys, if you've clicked on this, you want to get started, you want to get an overview. Have a look at this list, and also let me know in the comments if you need more assistance on, okay, now I know where the ETFs are, but which one is best for me? Like, what particular ETF do I need to select? I'm happy to make another video on this one particular. I'm happy to provide further information. Let me know in the comments if you would like to have a deep dive into what kind of ETF might be most suitable for you. And then also, if you selected an ETF, you want to make sure now, I want to buy it, have a look in the US and in Europe. I listed a couple of online brokers you can have access to. I heard a few are really great. M1 seems to be good. Robinhood seems to be fairly popular. However, it seems like this is about gamification. Don't get lost in the trading, please. This is a long-term game. It's a marathon. It's not a sprint. Same within Europe. They're different online brokers. Myself, for instance, I'm using Trade Republic. I'm happy with invest and then, let it sit. So this is my kind of learning. Because I remember, again, when I was investing my very first time, 1 minute, 2 minutes, 5 minutes after I actually invested my very first time, I got excited. Wow, it's growing like 1.2%. And then, half an hour later, it was declining. So, oh no, what's happening? What should I do? It is exciting. It is emotional because, it is your money, and see it as long term. And again, for me, it worked out really nicely. And hopefully, fingers crossed, for you too. One last key message from me, actually not from me, it's actually from Warren Buffett. And Warren is saying, the stock market is designed to transfer money from the active to the patient. So be patient. Again, it's a marathon, it's a long game. Guys, thank you so much if you found this valuable. I know it was long. There's so much to talk about. I try to compress everything together as much as possible for you guys. If you found this valuable, if you want to hear more, learn more, let me know. I'm more than happy to provide really tailored information to you. The channel I just started, it's so small, so take advantage of, I can tailor videos right now to you. So as long as the channel is so small, it's hopefully gonna change, but as long as it's so small, take advantage of this. More than happy to provide value to you guys. So have a great rest of the week, and see you in the next video. See you later, guys. Bye.